Hi guys, so in today's video we're going to be going over order blocks and how to use these in trades. And to be completely honest with you guys, I don't actually use order blocks as much as I use fair value gaps, but they're really similar and we'll talk about that in the next video, which is about fair value gaps. But this video will be more focused on order blocks and it is a useful concept. And I know a lot of people who actually use order blocks a lot and they use it for like the majority of their trades. So I think you can really study these and you can actually create strategies off of this. But for me personally, I just prefer fair value gaps. I use order blocks sometimes, and there's people who use order blocks for entries for their higher time frame confluences. So we'll go over what an order block is, how to identify it, and then we'll go over examples where I actually use order blocks for my trades. What it is basically it is the last candle before a liquidity sweep. So before price does a liquidity sweep, there's going to be a candle there that is where orders were filled, and that is why it is called an order block, because that is where all the orders were filled before it goes up or down. So we'll go through all the examples. These two are for uptrend and these two are for down. So this is an example where we were previously in an uptrend, right? And then before price pushes up, before it goes up, there is down candles here. This last down candle right there is the order block. That is where all the orders were filled. That down candle right there was where all the orders were filled before price pushes up to take out this high. So that is what an order block is. Price sometimes what it does is it retraces back and taps the order block before continuing upwards. So for a bearish example, it will be an upwards candle here. So it would be an upwards candle full of orders getting filled of sells before it pushes downwards. All the orders are filled, and this order block is where price tends to go back to. It taps that order block and then continues going downwards. This is an example where this move right here is actually a liquidity sweep. These are just continuations, but this is when an example where it was like a reversal or retracement. So this would be a liquidity sweep here. So this wouldn't actually close below this. This would just sweep this and then push upwards. So what happens is price, let's say, was in a downtrend. It goes down, it sweeps the liquidity, and now that it has swept liquidity, it has collected orders. This last down candle collecting these orders now have a lot of buy orders, right? Because this is the last low. So now that we have a lot of buy orders, we can push all the way up, closing above this high, and then this down candle will be an order block for price to return to continue back up. So both of these examples here, it will be down candles that are the order blocks, and then this will be an example that's the same as that, but opposite. So it will go up, we get this liquidity sweep right here, we sweep out this high, we don't close above it, we just sweep it, we collect orders. So then this last up candle is the collection of orders for it to go down. We push downwards, and then price will retrace into this order block before continuing downwards. So if you guys get confused, that is okay. Just rewatch that a few times, and then we'll go through live examples in the chart. So a few things to note about these order blocks is that, number one, the larger the bodies, the better. If we have really large bodies here, it tends to be stronger order blocks. Number two, it can be a few candles. It can be a few, like 1 or 2 or 3 even candles that's here, as long as they're the same candles. So as long as they're the same direction. So for these uptrend ones, you want them to both be downwards, and this as well both be downwards. This as well both be upwards, and this both be upwards. And just remember, for bullish ones, for bullish order blocks, for it to retest and continue upwards, you want it to be down candles. For these bearish ones where you tap and go down, you want the candles to be upwards. And number 3 is that you can also use the wick of the order blocks to the wicks also are included in that order block. It's not just the body. So what I did was I went through my diary and I went through my journal and had a look of where I use order blocks. So we'll just go through the 1 hour. You can use literally like 1 hour or 4 hour, it doesn't really matter, but I would just be using 1 hour examples today. So for example here, we were previously going upwards, down, up, we retest into that order block, and then we continue upwards, right? So this right here is that down candle right here is that order block. An order block is usually before a fair value gap as well. Here, we'll get into that in the next episode, but this is that order block right here. Before this move upwards, we get this last move down, collecting orders, and when we go down, we move up, and then when we go down, we tap this order block and then we continue upwards. And this is an example where we really like pretty much perfectly respected it before. Instead of closing below, we literally closed right there. So that is an example where it respected the 1 hour order block. So then there was other confluences there that I look for, and there's probably like a 4 hour fair value gap overlapping or something. But if there's a lot of confluences here and there's a 1 hour order block here, it usually makes the area where price reverses a bit more accurate, so you can see where price is likely to react off of. So we react off here, we get a strong close, and that's how I got this trade idea right here. So here's another example which is pretty similar to that one, where we have all these choppy price action right here, but as soon as we tap this order block right here, you can see this is a downwards example. We got this upwards candle here, right? This upwards candle before going down. We went into it, we respected it, and then we started selling off all the way down. And see how it respects this first hour candle. We close below it, we close within it. That's respecting the order block. If we close above it, then I wouldn't look at this trade anymore. That wouldn't be a trade idea anymore, because it just disrespected it. To respect an order block, it just has to close within it. It doesn't matter if we wick above it, and that's fine, but we want it to respect, and we don't want it to go into it too much as well. If price does that and just keeps going into it, then I wouldn't really look at it too much, because it's respecting, but it is not a very strong order block because it's not really creating any action. So for it to be a really strong order block, you want it to just tap once or twice. See here, we only tap once, but that's fine. See, this is an example where we have this upwards candle before we go down. Okay, so we have this upwards candle here before this move down. This last upwards candle is that order block. Or even this one, actually, I didn't even realize, but this is an example, I guess, where you can put it as both. It doesn't really matter whether you put it as the lower one or as the upper one, because even if you put it as the upper one, I think it did tap anyways. See, it tapped that order block before heading downwards. So there you go, the up candles before going down. And I think this here as well, if we move it here, this candle, this last candle before price moves downwards, we got this upwards candle here before price moves downwards. Tap it, go straight down. Upwards candle, go straight down. And probably even here as well. Nah, this one it didn't tap before it go down, but it could be the H4. It could be the 4 hour order block. If it's a larger move like this, sometimes it could be the 4 hour order block right here. This whole thing could just be like maybe 1 or 2 candles, right? So it tapped in and just continued downwards, but it doesn't have to tap into an order block. So here is an example where it doesn't. So here is an example. We have this order block right here, right before price moves down, and it doesn't tap. It just goes into this gap here and it just continues down lower. So it doesn't tap this order block right now. So not all the time order blocks get tapped, but sometimes it does. And another example is here. It goes up. This is an example where it sweeps liquidity, right? This is a move where it swept liquidity, and we go up, we continue downwards, and the last up candle before going down, that is an order block. We tapped it and then just continue straight down here. See how this whole range is a down range, but this last candle before this continue move down is an order block. So it's like this: go up, down, up, down, like this. So this is our order block right there. Another example here where I call a short, and this is why I like looking for low hanging fruits, because sometimes it doesn't go all the way down, but it still produces a move down. So we got this up candle right here as our order block here before price moves down. We tap into it and then we start going down. Another one here, last up candle before going down, tap into it, goes down. But order blocks are a pretty simple concept. It's just like putting it together that's a bit more complicated. So all these videos so far of this series should be pretty simple for you guys to digest. I'm just showing you guys pretty much what it is at a pretty fundamental level. And if you guys still don't really get it, I'll link a video in the description to another video that might explain it a little bit better. but I think what I've done in this video is pretty sufficient. But there's an even better video by TTrades that you guys can check out. Yeah, this should not be the hard part. The hard part would be probably putting all the concepts together, but for now, that is it for this video, and I'll see you guys in the next video.